Hello, everybody. Welcome back to another episode of The Market Close. It is Wednesday, May 29th. We have a lot to talk about today. We've got CRM after the bell. We got Path after the bell. We got C3AI after the bell. We've got Okta after the bell. A bunch of software names reporting. Going to be very important earnings. And a lot of these are important for Palantir because Palantir operates in the SaaS space, and SaaS has not had the best month over really the best 2 months. So a lot of big names that are reporting. We got a lot to talk about. We got Sam Altman updates. We have Donald Trump and Elon Musk potentially working together in the White House. Insane. So we got to talk about that. And then we have Dell. For some reason, Dell, the only Dell I know is Adele. Okay. It's by the way, you guys see the battery? Everyone thinks I'm photoshopping my photos when the battery's low. No, the battery's just always low. The only Adele I know is Adele. And I haven't listened to her album in a while, but someone like you rolling in the deep, I mean, like Dell is rolling in deep piles of money, okay? Like, I don't know why they're up 7%. I'm trying to get some understanding of why they're up 7% today, but this stock now year to date, Dell Computers, the thing that most people think is not even a company anymore, up 135% year to date. It is insane. Absolutely insane. I'm Beneficial says Dell price target raised from 130 to 180 from Bank of America. So I think I saw that this morning, but I didn't think it was going to. Dell is up so much. I didn't think it was going to bring it up another 7% today, dude. Or at least when I saw that, I didn't know it was going to have the impact that it did. It was up basically like 1 or 2% for the day. And now at 3 p.m., it's absolutely breaking out. So we got a lot to talk about. We got a lot of earnings to discuss. And then after the bell, it's going to be an exciting market close since we have a bunch of stuff going on. All right. Thank you all for being here today. Let's get into it. I think we'll start off with the news of the day, which is this Trump Elon news. Okay, so let's get through this one real quick, and then we'll get into all the earnings we have in about 10 minutes. Wall Street Journal comes out with a report today, and the Wall Street Journal is basically saying, hey, it looks like Elon Musk is going to work together with Donald Trump potentially in an advisory role, or Trump is considering Elon to be in an advisory role if he gets elected. So this is the headline right here. Donald Trump is weighing an advisory role for the Tesla leader in the event that the former president reclaims the White House. Now, to not be political about this, right? Because it can go either way, right? You can vote for whoever you want. Analyzing the business argument behind Trump and Elon working together, I think is really interesting. And the reason I think it's interesting is because Donald Trump, we all know, is not a fan of EVs. He has his own agenda. He is appealing to his own base. He doesn't really care about people that drives EV. He wants to appeal to the people that essentially are union sort of blue chip workers, and they work at auto factories, things of that nature, right? Doesn't really like the concept of EVs in general. However, I think Trump is a business guy, and I think Trump knows how to negotiate as well. And I think there's an argument that Elon Musk could convince Trump to budge his rigid stance on EVs. By the way, objectively speaking, Trump is not as rigid as you think he is, right? He used to be for abortion, then he turned against abortion, right? Like this guy, he's a what is that animal? That the camouflage? I'm forgetting the name of the animal, but like the thing that like a chameleon that adapts to his environment, right? He does what he has to do, and pretty much every politician is. So I think Trump would embrace Elon as the technologist of our time. He would put him on a pedestal the way Biden has not done, even though one could argue Biden should have done this, not inviting him to EV events, saying that Ford is the best EV company, like just blatant disrespect for Elon. I think Elon's also rejecting much of the cultural left in terms of what's going on the sort of societal parts of the left-turn part of our political spectrum. So I don't think an endorsement of Trump would surprise me if he did it. And if Elon has Trump's ear and can convince him about regulatory frameworks for AGI, artificial general intelligence, that may be another reason Elon endorses him. Why would that be another reason Elon endorses him? Because right now, if Elon's afraid that Sam Altman's going to take over the world, by the way, we have some new updates on Sam Altman. We're going to talk about that after earnings, but there's a bunch of stuff we have to talk about there. Really shocking shit that just came out on Sam Altman and his former board member on why they fired him in November. If he thinks, Sam Altman's taking over the world, who does he talk to? He can't call up Joe Biden and be like, yo, this Sam Altman guy, OpenAI guy, like, we really need to talk. Joe Biden's A, probably not going to care that much. B, they don't have the best relationship. If he has a direct ear to Trump, maybe, and again, hypothetically, he can talk to Trump and say, hey, we need to think of AI in this way. And Trump, engages with Elon's team in a very productive way. Maybe there's a way that that relationship works out. Or the opposite side, let me give the opposite side. Trump and Elon are a mess. Trump does not change his stances on EVs. Elon can't get through to him. Trump doesn't understand any of the technological parts that Elon's talking about. And the whole thing is just a marketing campaign for him to buy votes, similar to what he's doing right now in the context of being a crypto first president. I don't know how it's going to turn out, but it is very interesting to see how that potential partnership could play out. And I think there is an argument that that partnership could be productive, but it also could be bad. As a result of this news, Tesla stock, I think it was up today a little bit. Yeah, it's up just slightly. I got to 178 at one point. Now we're getting some red candles here at 176.89. So not too much movement on the stock. Nvidia. So in the morning, Nvidia was tanking by about 2%. It's funny to say Nvidia is tanking by 2%, but yeah, Nvidia was down by 2% and the entire market was down. Now we're seeing a bit of a recovery. Nvidia is about up 0.5% on the day. At one point, it was at 11.53, so it was up almost 1.5% on the day. So still turning green towards the end of the day. Meta's down a little bit. Microsoft's down a little bit. Google's down a little bit. Amazon's down. Tesla and Nvidia are green. Faraday Future, that meme stock that we've been talking about on the channel for a couple weeks now, that one is down. How much is that down? That's down 64% of the day. So the rug absolutely got pulled. I mean, down 60% in a day. If you bought in at $1.20, goodness gracious, if you bought in at $2.50 or $2.20 where it was at one point, yeah, you're down. You've got some big bags on this one. I don't know why this is down, but the point is it's down. The rug got pulled. And so Faraday Future is now down 63%. Overall, why was the market red today? Is the S&P still red? The S&P is still red, down 1%, but it was down even worse than it is right now. Oil is going up because of OPEC not increasing supply. The 10-year is going a bit higher. Bitcoin, it was down because GBTC sold. Obviously, Bitcoin still had good inflows, but GBTC selling did, put Bitcoin down a bit. So that hurt the crypto stocks. And then you had people just wanted to take profit. So I think what we're seeing right now is a bit of a just like regular, normal fall off, which is very. We all expect this stuff to happen when the market goes up a lot. Nothing too crazy. But interestingly enough, throughout the day, Robinhood, one of the stocks that remained green, obviously Robinhood with that $1 billion share buyback, they got to 21.14 today, now at 21.03, up 2.7%. So Robinhood stayed green throughout the day. Nvidia stayed green throughout the day. And then you had your good earnings companies like Dick's and Chewy and Abercrombie. Abercrombie now up 23%, Chewy up 27%, Dick's up 15%. That stayed green throughout the day. Pretty much everything else was red. I mean, if you look at the left-hand side of my screen, pretty much everything else stayed red. But companies that had great earnings, they were up. And then Robinhood and Nvidia were up. I mean, really, those were the green stocks of the day. So interesting to see how the market kind of played out today and what stocks chose to go green and where the broader market started to segment capital and started to flow capital into. Oh, Kava's up a little bit. Yes, Kava's up as well. They recovered. I actually watched an interview with Kava on CBC today. The guy is not that bad. The CEO makes a lot of sense. It's up 7% right now. And I think that makes a lot of sense. Dude, it was down 7% yesterday. And it made no sense to me because they had a phenomenal earnings. Maybe sometimes you just need to go on CNBC and like talk your book. And when I got, this is the first time I heard from the CEO, I was just like, yo, this guy, I mean, he had a really good answer, right? Someone said, hey, why are you not growing faster? Like, why aren't you opening up more restaurants? He gave such a good answer. I've never heard this answer before. He said, you can't scale restaurants the way you scale SaaS. He's like, restaurants are a people business. He's like, if we open up 50 restaurants and all of them are managed by horrible people and the employees don't like working there and yada, 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 like those restaurants are going to fail. So I really like the approach he had and the explanation he has said for why people come to Kava, why they pay the extra $2 or $3 for Mediterranean food. And it was enough to get the market excited. This one's up 7% now on the day. Now, another one, ASTS. This thing is up 68% on the day. And the reason this one is up has to do with working with another company, and that other company is Verizon. So Space Mobile stock is up 50% after Verizon partnership for satellite internet to phones got the company up on the day. Let's read a little bit on this one, and then we'll keep talking from there. So AST Space Mobile is building satellites to provide broadband service to unmodified smartphones. The company's chairman and CEO, Abel Avalon, touted AST's agreements with Verizon and AT&T as essentially eliminating dead zones and empowering remote areas of the country with space-based connectivity. So I don't know this company that well, but from my understanding of it, they create satellites to help create more connectivity. And obviously those satellites go into space. They have to partner with different telecommunication companies. In this case, for today, they partnered with Verizon and AT&T. Verizon's deal effectively includes a $100 million raise for AST, as well in the form of $65 million in commercial service repayments and $35 million in convertible note debt. The company suggests that $45 million of the prepayments are subject to certain conditions, which are needed, such as regulatory approvals and signing of a definitive commercial agreement. So off the speculation that Verizon put out a memorandum of understanding with AST, The stock is up 50%. Now, I don't know this company that well to know why this is that big of a deal, quite frankly. Like, I'm just not that sure why it's up Wow, it's up 72%. A market cap of 2.36 billion. I don't know the financials of this company. Honestly, I've heard of this company before, but I found out about it for the first time today based on the news. If you were in this one, or you had a feeling this one was going to take off and you're up 70% in a day, which is not easy, congrats. I mean, this is one of those that deserves a win. And especially if you got into it, I do not think this is a meme stock. Maybe 70% is a little meme stockish, but I think the partnership is a big deal. And if it's going to increase revenue and increase earnings, then I mean, yeah, at a $1.5 billion valuation, you're going to get people that want to buy into it. The theme I think we're seeing here is small caps with a catalyst continue to go higher. So IWM is down 2% today. Why is IWM down? Because all the companies in the Russell, which I've been saying for the past couple months, all these companies, when I actually on the show, when we looked into the companies in this index, they're all crappy companies. Like they're all companies that like they need a rate cut in order to survive. They need to refinance their debt. They're not profitable companies. But if you're a small cap, and I know small cap is technically below 2 billion, but I'm just going to say 2 billion to 10 billion is a quote unquote small cap. And you have a catalyst, like a crypto stock or an ASTS or even a GameStop to an extent. I know that's more memey, but you get my point. If there's a catalyst there, then you have the momentum to keep going higher. Even Abercrombie today is up 23%. It was an $8 billion market cap, now 9.62 billion. I would say that's a quote unquote small cap. I know that's not technically a small cap, but that's a small cap with a catalyst. They executed on earnings. They got rewarded. So I think finding individual names versus just betting on IWM is not the worst strategy. I think IWM is still going to do well, but we need that rate cut. And if we get that rate cut, then we'll see some more momentum. American Airlines is down. Yeah, American Airlines is down. This bad boy's down 13%. Yesterday it was down as well. I actually don't know why it's on. I'm going to do a quick Google search for what happened to them. There's a pretty big controversy here. Oh, so there's a racial discrimination controversy with American Airlines. Okay, so there you go. I've not even read into this story. I'll just literally on Google. Those are the first 4 headlines I see. So that could be one of the reasons why that one is down. United actually got upgraded today by Bank of America to, I think, $64. And United is not doing too bad. Yeah, that one's up 3% on the day. Cool. So that's what we got on United and American Airlines. All right, we have the market close in 2 minutes. We have a bunch of earnings after the bell. Let me read out some of the companies that we are looking at. So Salesforce, the street wants $2.37 EPS and $9.15 in revenue, 9.15 billion in revenue. Okay. So that's what we're looking at. Salesforce. Path, the street wants 12 cents for EPS and then 333 million in revenue. And then Okta, the street wants 54 cents in EPS and then 604 million in revenue. What's today's date? Today is 5/29. Okay, let's build our watch list. So these are going to be some big companies. I'm going to watch for how that implicates Snowflake, Datadog, Palantir, etc. Because, I mean, these are pretty large companies, and we want to see the implications they have on broader SaaS names. And then we have C3AI as well. That one is going to be after the bell, and we'll see how C3AI does. So these are the companies we're looking at. I think we have HP after the bell as well. Let me add HP. I think we have HP after the bell. So they'll be reporting as well. And yeah, Dell is up almost 8%. The reason Dell is up, I just asked on Twitter, the reason Dell is up. So the price target was raised from Bank of America, but also I think they partnered with NVIDIA. Yeah, Michael Dell literally tweeted a picture of Jensen and a video of Jensen. Wow, yeah, that'll get the street excited. Okay, we'll watch that right after the market close. That'll get people excited. But the NVIDIA partnership is getting people ready to think of Dell as a proxy play to NVIDIA. And I mean, look, NVIDIA's up a lot. If you don't want to spend $1,000 a share on NVIDIA, or you don't want to pay $2.8 trillion for NVIDIA, then maybe you bet on Dell. And that's what we're seeing right now. 4 p.m. Wednesday, May 29th. Thank you, everybody, for being here. The stock market is now closed. All right. We'll get into these earnings in a second. Let me see how the rest of the market did, and then we'll get back to that in 2 minutes and see what we got our earnings. First of all, on crypto, Clean Spark 1707 down 3% on the day. Coinbase down 3% on the day. Bitcoin 67,221 down 2.2% on the day. Robinhood closes at $21.09 after hours, $21.09. up 3% on the day. Now it's green after hours as well. So those are what we got in the crypto names. On the Mag 7, we got Nvidia a little bit down after hours, but green on the day. Tesla red, Google red, Meta red, Microsoft red, Apple red. And again, not really red, but people taking some profits. It's declining a little bit. Makes sense that we're seeing some downside momentum. There was this new report on Apple creating specific quantum computing chips for stuff that they're trying to do. But that really wasn't the biggest thing for the stock this morning. Elf also took a little bit of a breather. This one was down 5% of the day. Elf went on like a 25% run, so made sense that Elf just took a little bit of a break. The semis, AMD was down 4% of the day. SMCI down 4% of the day. Intel down 3%. Taiwan semi down 3.31%. And NVIDIA was green. So NVIDIA, again, outperformed all the semis. It was up 1% while everything else was red on the day. Okay, AI, Okta, Path, and CRM. We have Okta is up 4% after hours. We got a green candle. Oh boy, Salesforce is down 7%. Oh boy. Oh boy, that's not good. That's not good. Wow, it's dropping. It is dropping. 8% down. Oh my, 9%. Holy guacamole. It is dropping badly right now. Let's see if it recovers. We've seen plenty of these stocks do this stuff during earnings where they recover and they don't fall as bad as they were. Let's see. Damn, dude, that's a pretty harsh reaction. Where is it down now? Wow, it's down 10%. Oh my, 9.6%. Oh boy, people are selling. Why are they selling? Look, the thing about Salesforce is, we know Salesforce. Okay, Salesforce has been around since 2005. It's not the most exciting company. They ushered $40 billion in buybacks last quarter. That to me was not like the Robinhood buybacks or the Apple buybacks. Apple was like a CRM. It was more a sign of weakness of like, hey, we really don't know what else to do with our money. And that's okay. When you get that big, like an Apple or a CRM, you kind of don't know what to do. But at the end of the day, it begs the question, well, should we be paying a real high multiple if you're a SaaS name or if you're Apple, but you're not really growing? Now it's down more than 10%. Wow. All right, let's get the numbers. What did they report that was that bad? And again, if it falls 10% and they just buy back their stock, that'll help. But if investors don't believe there's a growth story, like Apple, investors don't believe there's a growth story, then it can get a little tough, right? And the buyback might not be able to necessarily help. Okta is down 8% as well. Okta's down 8%. Okay, so let me pull up CRM and Okta. Let me also pull up CNBC, see if we can get their live coverage. Okay, CRM, the results are in EPS of 244, beating expectations of 237, revenue of 9.13 billion, missing expectations of 9.15 billion. So they missed on revenue, they beat on EPS. Stock's down 9%. Stock's down 10.7%. Oh my God, it's about to be down 11%, dude. Wow. Where's Palantir? Oh boy, hold on. Palantir is down a little bit, 0.19. Where's Snowflake? Snowflake is down a little bit. Datadog's flat. Okay, Adobe is also flat. All right, so the other SaaS names haven't been hit too hard, but Salesforce is down now 10%. Okta down 5%. C3AI, a little bit of a green candle, don't have their numbers yet. And then Path is up 1%, going to get their numbers in a second. Okay, so slower guidance. Let me see CRM. Let's try to pull up their actual page and see what they have to say. This is the opposite of Dick's, Abercrombie, and Chewy today. Those three companies, which are basically, I would say, consumer names, right? They're retailers that sell sports goods and like pet food and clothes. They did great today. They actually did phenomenal. So this is a bit of a different from a SaaS perspective. All right, here we go. I got the results. Here we go, Salesforce. Here's what Salesforce put up in terms of their results. Oh, wow. Revenue growth 11% year over year. That's actually not bad, dude. I thought it was going to be 7 or 9%. I mean, for a company to be at Salesforce's side, remember, guys, they're a $270 billion market cap. For them to be growing 11% year over year is not easy. Now Salesforce is down 11.4%. That's not easy for them to grow that much. That's actually, again, I don't know their business that well, but I don't think that's horrible growth. First quarter GAAP operating margin of 18%. Returned 2.2 in the billion. So they bought back $2.2 billion worth of stock. Wow. Imagine where the stock would be if they didn't spend $2 billion buying back shares. See, that goes to show you that the market might not care that much anymore about Salesforce. I mean, like, that's a lot of share buybacks. First quarter operating cash flow, $6.25 billion. They paid back $400 million in dividend payments. Oh, they issued a dividend as well last quarter. They issued a dividend and they did buybacks. So they did those two things. Second quarter full year revenue guidance, 9.2 to 9.25 billion, up 7%. That's fine. Lowers full year GAAP operating margins. That is something that's down. And revenue growth guidance slightly below 10% year over year. So they lowered a little bit of their operating margins guidance and a little bit of their full year revenue guidance. And it looks like that's why the street is tanking them 10%. I don't know if they deserve to be down 10%, but that's why the street is upset. Path is flat after hours. I mean, we're not really seeing a move here. C3AI is up 10%. Let me pull up their numbers. And let me also see if we got anything from Path. Let's do Path first, then C3AI. So Path, we have no numbers on Path. If anyone has Path, let me know. I don't see any numbers on Path, so that's probably why it's flat. For C3AI, the results are 20% year-over-year growth revenue, 86 million in revenue. Margins were 60% GAAP gross profit, and they lost 59 cents a share. So they're still unprofitable. It looks like they raised guidance and they beat on their revenue targets. And that's why that's a Pat's at 410. Okay, fine. Pat's at 410. That's great. So CRM is down 11%. C3AI is up 10%. Look, C3AI is, I'm not the biggest fan of the company, but it's only a $3 billion market cap. So you could see like a swing, and also their ticker symbol is AI. And like, for some reason that still gets people excited about the company. But yeah, that could, these numbers definitely could justify a 10% move on this. It's not that hard for that to happen. So they raised guidance. Their growth accelerated for the 5th consecutive quarter, and their federal growth subscription revenue, so their government revenue, increased 41% year over year. So that's what you got on C3AI. These are the actual numbers right here. CRM down 12% now. Yeah, that's crazy. Why is Dell up 8%? I'll show you guys why Dell's up 8% in a second, but this is what we have for for C3AI. So good across the board. CRM reducing a little bit of their guidance on full year and operating margins, and that's why it took a hit. Okay, Dell. So this is what Michael Dell tweeted today, which is why the street's excited, along with Bank of America upgrading the stock to 180.
In our booth here, Dell offers more end-to-end computing technologies for the world's enterprise than any company in the world. If you need anything in IT, anything in computing and enterprise, you know exactly who to call. You call Dell.
Wow. Let's hear that sentence one more time. That'll get your stock up 10%.
You know exactly who to call. You call IT, anything in computing and enterprise, you know exactly who to call. You call Dell.
I mean, dude, Jensen's got the Midas touch. He's got the Midas touch. He says, you call Dell, you're going to call Dell. What did he say about Tesla? He said Tesla's the best FSD. I mean, people got excited. Like, Jensen's the guy. Wow. C3AI up 13%. CRM down 14%. Oh my God, dude. They just lost $37 billion of market capitalization. Salesforce has just lost it in 9 minutes. Wow. Path, we should be getting Path's earnings in like literally 30 seconds. It's up 1% after hours. The street might get excited for it. They might know the numbers are good, or we might see some downside. So let's see what happens with Path. Wow. Goodness. Isn't that called pumping the stock? Yeah, pretty much. Well, I don't think Jensen's pumping Dell. I think he's just excited about Dell. And as a result, the market's pumping Dell because if Jensen's excited about Dell. Also, Bank of America, a $50 upgrade on a stock. I mean, that also will get the street excited. So 130 to 180 definitely got people ready to buy Dell. Okay, so we should be getting Path in 30 seconds. I'm not that big on Path. For some reason, a lot of people like Path. And I don't really know why. It's robotic processing automation. Look, I think they'll probably have a good earnings. They've been down a majority of the past couple of years. So I think the stock was at $90 at one point. So they'll probably do okay. Or maybe, never mind. As I say that, they're down 12%. Never mind. As I say, well, this is the reason I'm not that excited about Path, because like, what is so excited about robotic processing automation? Look at this, dude. I keep scrolling down. All we get is another red candle. Dude, how does it fall 13% in 2 seconds? How does that happen? In 2 seconds? Literally in 2 seconds, bro. It turns 410, but we're down 17%. What is going on? What is this, dude? This stock's down already. Hold on, all time. This stock, just to give you guys some context, Path stock over the past 5 years is already down 75%. So, I mean, I've never been a super big fan of it, but still, to fall another 15%, goodness gracious, how badly, they're down 18% now, 19.3%. What could they have possibly said to fall another 20% after being down 75%? I mean, they're basically down 90% over the past 5 years. Oh my God, I forgot this is a big Kathy stock. This is insane, dude. Wow. Okay, let me get their numbers. Yeah, a lot of people, even yesterday, people were like, yo, what's Path? There's some people in the chat like, yo, where's Path? And I'm like, guys, Path isn't out, but like, why are you so excited? like, what is so interesting about Path that you guys are asking me a day before the earnings about what Path's earnings are? But I guess it has a following and people care about it. Okay, revenue is $335 million. That increased 16% year over year. Cash flow from operations, $100 million. ARR of $1.5 billion. That's up 21% year over year. Non-GAAP gross margins, 86%. They missed on EPS by 1 cent, 11 cents versus 12 cents. They beat on revenue by $2 million. Why are they down 25%? Are you kidding me, bro? What is going on? It's not stopping, dude. 26%. It's down 26%. What is this? Holy crap. Let me pull up CNBC. This is astonishing, dude. This is just incredible. That's a big drop. That's not a small drop. 25%. We got to go look at Pure Storage. Yeah, we'll look at them as well. Oh my God. All right, I'm going to try to pull up the actual numbers from Pat's website. Dude, that is insane. That is absolute. I think that's the worst one we've seen so far. on this earnings. 27%. What did they say, dude? Did they say like they're not an AI play anymore or something? Did they like forget to put AI in their results or some shit? This is actually an AI play, by the way. Path is robotic processing automation. It is actually an AI play. It is literally an AI play. It's not like LLMs and the most amazing, but there is AI incorporated into robot and RPA. RPA is essentially mimicking how your computer is automating certain tasks, and then it does it for you. And a lot of SMBs have loved using it kind of as a pseudo digital twin compared to something like Palantir, quite frankly. So there is demand and interest for this company. But goodness gracious, down 30% is a bit ridiculous. It's now down 29.8%. 29.8%. If these earnings are good, we got to look at the leaps on these guys. If these earnings are good, we got to look at the leaps. I don't know if this thing deserves to drop 30%. If we get some December 2026 leaps, they might be so underpriced tomorrow, but we got to look at these earnings and see if there's anything worth it here. Okay, net dollar retention of 118%, $1.5 billion, up 21% year over year. That's not bad growth. That's Palantir's growth, 21%. That's not horrible. They lost $49 million. They're probably going to get profitable in the next couple quarters. That's not a big loss. They have $2 billion in cash. CFO says, during the first quarter, we saw increased deal scrutiny and lengthening sales cycle for large multi-year deals. We have considered these factors, the current macroeconomic environment, and our leadership transition in our updated guidance for the remainder of the year. While our revenue and operating margin guidance are impacted by contract timing and duration, we have confidence in our ability to generate durable ARR growth at scale and meaningful non-GAAP adjusted free cash flow. Okay, so you know what happened? Oh, Path CEO is resigning? Really? I didn't know that. So, but this sentence right here of like we have considered these factors and we're re-updating our guidance. I think the AI algorithms that Citadel and the market makers run, they probably parsed through those words and they were like, yeah, sell the fuck out of this thing. They were probably like, this shit's dead. That's probably what happened. For the full year, oh my, they're not going to grow. Holy crap. They're not going to grow. They're expecting 1.4 billion in revenue. That's 0% growth. If I'm not doing the numbers wrong, that's negative growth. ARR in the range of, oh no, that's a little bit growth. That's a little bit of growth. Okay, so the revenue is a little bit different than ARR, but it's like maybe 5-6% growth. It's not a lot of growth. The CEO stepped down. The CEO stepped down. Let me make sure the CEO stepped down. So Path's CEO, well, why did he leave? Is he pulling another snowflake? Is he getting out there before shit hits the fan? Yup, Rob Enslin is resigning as CEO. Who the hell is Rob Enslin? Let's look up this guy. Rob Enslin. This dude is leaving. This guy's gone. Rob Enslin. He's gone. He's out. All right, he's out, and he's being replaced by Daniel, what's his name? Daniel Dines. Okay, so Daniel Dines, who is the former CEO of UiPath and the founder. Wow, they're getting rid of the CEO and they're bringing back the founder. What is this? It's actually kind of bullish. I'm not going to lie. I'm just like a pure face value. That's kind of bullish. By the way, CRM down 15%. Oh my goodness. C3AI is up 10%. Okta, we haven't looked at their earnings, but they're up 2%. UiPath now down 28%. All right. Who is Daniel Dines? Daniel Dines, UiPath. Daniel Dines is this guy. This guy, Daniel Dines. He has a nice beard. Daniel Dines. Huh. Okay, so he's coming back. Well, this is kind of weird. Why is he coming back? Well, first of all, why did he leave? And then why is he coming back? Something's got to be going on internally. This is kind of like a Disney thing, right? Bob Iger came back after a while because shit was not going well. Kind of feels like that a little bit. Let me pull up CNBC, see if we can get some coverage. We got HP results as well. Salesforce. They're not talking about Path. Let's get HP results real quick, and then we'll keep going back to Path. Wow. Starbucks CEO needs to come back. I agree, dude. We need Howard Schultz back. All right, here's HP.
Has those numbers, Steve.
Yeah, Morgan, a beat on the top and bottom line here for HP, and guidance also beating estimates as well. We got EPS at 82 cents adjusted. Street was looking for 81 cents. Revenues, $12.8 billion versus the $12.6 billion expected. And then I was able to catch up with CEO Enrique Lores on these results, and he told me that PC has returned to growth rather after all that pandemic buying, and we've seen PC sales just crater in recent years. And also talking about the AI PC boom here, he told me that he sees 10% of PC sales in the back half of the year will be AI PCs, and that will grow. And 3 years from now, he sees up to 60% of HP sales being AI PCs, Morgan.
Interesting. Okay, well, shares are up about 1%. Steve Kovac, thank you. After the break, we've got much more on the big.
All right, so HP did fine. Wow, this Path news is still incredible, bro. This Path news, oh my God, down 29%. Wow, dude. Holy guacamole. Okay, C3AI is up 9%. HP's up 7%. So great news for HP. We just saw their numbers. Okta's up 3%. We'll pull up their numbers in a second. Does anyone own any of the names here? Does anyone own Path, C3AI, HP, Okta, or CRM? I'm curious. I don't own any of these names, but curious if anyone does. Let's get Okta's numbers real quick. Okta... Q1 EPS 65 cents versus 54. They beat on EPS. Revenue 617 versus 604 million. Guidance, they raised guidance by 5 cents for EPS. They raised guidance on EPS by 15 million. They raised guidance for full year 2025, raised revenue for full year 2025. The stock is up 3%. So Okta looks like they had one of the better earnings today after hours. So did C3AI. Okta, $16 billion market cap, up 3% after hours. Path still down 30%, and CRM now down 14%. Okay, so we are going to do a big deep dive, guys, over the next couple of days into Path, because when a stock falls 30% and there's something fundamental to the company there's nothing wrong, then the leaps become very attractive. The options become very attractive. The market doesn't know how to price them, and there might be an opportunity there. But now it's down 31%. The question, now it's down 32%. As I'm saying, hey, maybe there's an opportunity here. This thing starts to just keep going down. Now the question is, why the hell is the street this upset that they lowered guidance? Okay, that's not good. I get it. That's not great. And then the CEO left. That's also not great, but the founder's coming back, which I kind of like. I like that the founder's coming back. He's trying to save his company. We saw this with Disney. Disney fell to $79 back back in freaking, look at this, back in summer of 2023. And then they went all the way back up to 123. Bob Iger came back around this time at 140, fell to 78, now right back to 100. It got to 123 at one point. So the founder coming back is not necessarily the worst thing ever. And if you got some options or you bought some stock at Disney at $78, I mean, even if you just buy the stock on Path at $12, it's not necessarily expensive. One could argue just from like a pure dollar perspective. Obviously, if the earnings growth is bad and we got to look at all the numbers, maybe it is very expensive. We got to go through the financials at $12 a share. But maybe there's an opportunity there. The question is, how bad is these earnings to justify down 30%? Kevin says the company is riddled with debt. Okay, see, I didn't know that. So that's why I'm saying over the next couple of days, we really got to get deeper into Path. I know nothing about the company. All I know is the stock's down 30%. It's a tech name, RPA. It's in the AI space. And it looks like the founder left or the CEO left, which is why it's down 30%, which maybe isn't the reason that it should be down 30%. Now, on the contrary, to contradict my own point, Snowflake, their CEO left, and this stock is still down 30%, and they haven't recovered. And they had a really good quarter. They were up 34% last week. So Snowflake is an example of a company whose CEO leaves. The company has a great earnings the next quarter, and they still just can't get any love by the market. So it's definitely one of those things you got to be careful out if you guys immediately jump into Path just because it's down 30%. Question is, why did the founder leave in the first place? That's a good question. I have no idea. I have absolutely no idea. Keep in mind that when a stock drops, it might bounce a few times, 3 to 4 days before heading back up. I bought at 13.35 and we'll wait a few days to see if I can get more at sub 10. Okay, so Chris, put in the chat why, like in a nutshell, why did you buy Path after hours? Like what was exciting to you on the drop? You don't have to give your full thesis, but like what was the reason when you saw it fall to 13, you got super excited and you picked up some shares? I'm curious, what do people see in this one? What do people see in this? Bsoft says, imagine the AI scanners picked up Danny Dimes and associated with the New York Giants quarterback. Oh my God. Could you imagine? Could you imagine? Dude, that's crazy. That's crazy. Now I'm a Path bag holder. I'm sorry. First of all, okay, for the people who bought Path, I'm sorry you're holding the bag right now. It is what it is. I've held bags before in the past. This is just the nature of being in the stock market. You're going to hold some bags. For anyone who has Path stock, why did you buy Path? Why did you buy Path? Let's get some due diligence here. Why did you buy Path? What was the reason you got into the stock at 18, 19? Did you see Kathy bought it and you got into it? Or like what was the reason? ARK Holdings. Let me see how much she has of this one. ARK Holdings. Let's see. Because I mean, look, there's this guy on Twitter who one of my friends, what's his name? Antonio, and he did it. I actually did a podcast with him a while ago, like a year ago, talking about, he said like Path is the next Palantir. And he gave me his thesis and I was like, all right, whatever. But like, I gave him we did the podcast live and we got him to give out his arguments. I don't know if he holds any Path. He holds way more Palantir than Path. I know that for a fact. But he said, look, there's some value in Path. And ever since then, I've like been interested, but I never actually pulled the trigger on it. But I'm curious to see why people liked it. Bottom in 2022, friends bring replaced by this company. Okay. So you said, so you're saying the chart on Path is, okay, so let me look at the chart. When was the last time Path was at this level? Let's just see real quick. Over the past 5 years. So the bottom was $10 in 2022. Now it's at $12 and it got to $30 at one point. So it basically 3x from the bottom from November 2022 to February 2024. And since then it's fallen basically 70%. Interesting. Okay. Meant friends were replaced. Okay. Got it. TJ says there was like zero open interest in the options. Yeah, maybe people aren't going way far out for Path. The Spotify guy loves it. Yeah, I think Spotify uses Path. A lot of businesses use Path. It's not like a dead company. But my question is, why is there an investment thesis there? Okay, let's go to ARK Holdings. Kathy has, 18 million shares of Path in the ARK ETF. It's the number 5 position. Oh my goodness. That's a lot of Path. That's a lot of Path, bro. Oh boy. That's a lot. Ticker symbol U likes it. Okay, I love ticker symbol U, but he likes a lot of stocks. I love Alex. He's a friend. But he was bearish on Palantir a month ago. Now he's bullish on Palantir. He's like, he flip-flops a little bit as well on his stock picks. But But I mean, what's the real thesis for this one? You know, like what is a real thesis for Path? She is probably the one selling, bro. If Kathy's selling after hours, oh my god! If Kathy's the one selling this, oh boy, today's gonna 8 p.m. when we get that email from Mark. That's gonna, dude. If Kathy actually is the one selling her Path, and she's the reason it's down 30%, that would be sad, bro. That would be crazy. And then imagine she's not, and she chooses to sell. Then this sucker is not coming back. This thing's gonna get hit. This thing is getting hit. Maybe I need to get Ticker Symbol U on a podcast, dude. Maybe we need to. It's been a while since we did a podcast. Maybe I can get him to give me the bull case for Path, and maybe he can give me like a 5-year thesis and why it's not that scary if it dropped 30%. Wow. Okay, let's get back to CNBC. Let's see what they're talking about on Salesforce. So Salesforce is also down 15%. Let's get some updates on why Salesforce is down that much and what's going on there, and then we'll get back to Path. I'm gonna pull up a couple websites right now and see what I can get on Path. All right, here we go.
Investors have to try to parse through these top line numbers. I mean, I'm thinking about Nutanix, for example. Yeah. People are going to look at the guide versus Salesforce. There might be some different detail here, maybe some opportunities.
Certainly different detail, also different setup. I would argue, Nutanix has really been on a run in terms of the stock. Salesforce, I do think it's sort of just not where people have high conviction or excitement. The narrowness of the way the market has behaved, whether you look at, NVIDIA and its tight orbit of other companies, building what they're building relative to everything else, shows you there is a scarcity of conviction that there are going to be kind of a broadly inclusive group of winners. So I would just take the market almost at its word in terms of feeling of, where the safer bets are, and be alert to the idea that the market tends to overpay for the things that are perceived to be sure things eventually.
Yeah. Charlie, I'll give you the last word here, especially as you do have this conversation about what the so-called picks and shovels of AI and what has been outperforming in this market as of late, because that has extended to some industrial companies. It's extended to some energy companies. But we have to put this entire conversation in context amid a rising yield backdrop right now.
I think that's temporary, Morgan. I think we got a very temporary indigestion for some big auctions. I think we're going to get decent inflation.
Okay, so nothing not that much coverage there on Salesforce outside of the fact that they think the valuation might have got ahead of it a little bit. Path is still down 31%. Snowflake's now down 1%. Palantir's down 0.5%. Palantir basically at the same price it was at all day, though, so nothing too crazy on that. S&P is down a little bit after hours, down 0.22. SoFi is down 0.37 after hours. Celsius is down 79.50. PayPal is flat. Chewy's down 1% after hours. Faraday Future down another 12% after hours. Dude, if you are in Faraday Future today at $1 or even at 80 cents, it's at 38 cents right now. So obviously it looks like people are running for the exits on Faraday Future. United down a little bit. UNH is down a little bit, whereas Robinhood is $20.91 after hours. That's down a little bit. And then Palantir is down. The big story here is Path and CRM. CRM is now down 17%. Bro, they like, is there something different that we got to go back to their earnings? How is this down that much? Like, I'm looking at 11% year-over-year growth. What did they say? Benioff says free cash flow was $6.1 billion, up 43% year-over-year. We are beginning at the massive opportunity for our customers to connect with their customers in a whole new way with AI. As the world's first AI CRM, we're incredibly well positioned. Their GAAP operating margins are up. What did they say that is that bad for these guys? Like, they bought back shares. They gave a dividend. Their guidance, I mean, they slightly decreased full year guidance, but does that deserve to be down 17%? I mean, like, really? 17% is like 50 billion in market cap, dude. That's a lot. Oh my God, dude. That is not good. That is not good at all for Salesforce. Ian says, Amit, I'm buying more Path. Dines, the CEO, is a temporary bridge to find a new CEO. So hold on. Someone is telling me, Amit, Dines, the founder of Path, is partying with women and he's on Romanian news all day. Is that true? Is this guy a guy who just parties? Path CEO partying. Is it true? Was this guy replaced because he was being too reckless or something? Because if that's the case and he's back, he's definitely probably there as a transition, but still, that's definitely not a good thing. I wouldn't argue that's the best thing. Let me go back to the stock. Yeah, a Salesforce, again, I know they missed on their profit margins, but I don't know if they deserve to be down. I don't know if they deserve to lose $50 billion of market cap in 20 minutes, dude. Like, is it that serious? Like, is it? Now, granted, I'm actually happy the market's this upset because it means that the market has a high threshold for like exact numbers. But it does feel like a bit of an overreaction, dude. Like, I don't think they deserve to lose that much. And they're probably just going to buy back their stock now at 224 versus at 270. And they're going to be able to engineer it back a little higher. C3AI up 9%. Okta's up 6%. Path is still down 30%. And Salesforce now down 17% on the day. He was partying with the Tate brothers. Oh my God. Could you imagine? My MongoDB shares are in trouble for earnings this week. Yeah, dude, I think every SaaS company right now, Salesforce is the cream of the crop when it comes to SaaS. Like, they do the most, I don't know the most, but they're up there. Like, they're like top 3 in terms of pure SaaS plays, valuation wise, revenue wise, etc. I think they do the most revenue outside of like Microsoft and those guys. They do basically $9 billion a quarter, almost $40 billion a year. I don't know of any SaaS that does way more than them. That's not like super big tech. Salesforce is the cream of the crop there. MongoDB is down 2%. Let's go to the SaaS names right now. SaaS names are likely going to be down on this news. Yeah, look at that. Look at the left-hand side of my screen. Everything's red. Oracle's down 2%. Confluent's down 1%. Palantir is down. Datadog's down. Snowflake's down. Adobe's down 2%. Adobe, by the way, is down 20% year to date. After I ranted about them this morning and I compared them to Canva, I actually looked at their numbers. They have not had a good year. CrowdStrike is down. Cloudflare is down. By the way, CrowdStrike, I think, has earnings tomorrow. And if they don't crush, if CrowdStrike does not crush, CrowdStrike's not going to be in the best situation either. Intuit's down. Twilio's down. Zscaler's down. ServiceNow is down almost 4%. MongoDB is down 2%. Atlassian's down 2%. Salesforce down 17%. Should we buy Path? I have no clue, and I will show you guys whatever DD I can find. I am absolutely going to rip into this one and try to figure out if there's a bull case here. Because this is what you want to see, right? That you want to see a stock fall so badly, everyone hate the stock, but there's a silver lining that the market's not seeing, and you pick up shares really cheap. That is the way to build like real money in the stock market, right? Real, this is what whoever has a below $10 average on Palantir, this is when you picked it up when no one wanted it. Now in this market, it's very hard to pick up stocks that no one wants because the stocks that are getting punished are actually the stocks that deserve to get punished. But there are opportunities where a stock gets punished where it absolutely did not deserve to get punished. The question is Path on the path to be one of those companies that doesn't deserve to be down 30% today? So I'm interested in this one. We're going to see. Your fear is my alpha. That's correct. Your fear is my alpha. I also think Dines coming back is just an emergency patch. Okay, now you guys got me curious. UiPath founder. I want to see is why did he get fired? Daniel Dines, UiPath. Daniel Dines fired. I'm trying to see if I can get any coverage on that. That's weird. If you guys are right that he was partying and ultimately he was a founder that couldn't really run the company and he was too obsessed with like girls or whatever, like that's not a good thing either. TJ said, check your text. What TJ text me? Okay, TJ, do you want me to tell everybody what you just well, I might as well because we're going to talk about it, right, TJ, on the show. So we got TJ who just dipped in a little bit and he bought 1,000 shares of Path. So there you go. You got TJ the wheel deal trying to find some opportunities. He's down 1,000 shares. TJ, is this my money that you're allocating for me? Am I now a Path shareholder? So for those that don't know, TJ and I are doing Basically, he's giving me 500,000 of his 5 million portfolio, and I'm wheeling it for him. So Fridays at the market close, we do a segment every day or not every day, every Friday for an hour. And so it looks like I just bought 1,000 shares of Path if he's allocating my money. And now I have to do some DD on this because now I own 1,000 shares of fucking Path. So there we go. I have to come back to you guys probably in the next couple of days and let you know what I find. I mean, let's just do a really quick run through on Path to see how bad the financials are. Let's go to my boy's website, Visual Stocks. Let's see how bad the numbers are. Revenue growth 16% year over year. Customers over 100,000 ARR. They have 2,000 customers over 100,000 ARR. Customers over 1 million ARR. Wow, 288. By the way, what's the company? Yeah, Snowflake has 450 customers paying them over $1 million. Path has more than half of that. It's not crazy. Net dollar retention is down a bit, but it's still high. Net income, they were profitable in Q4. They missed in Q1. So they're basically still not profitable. They're getting close. Shares outstanding has slightly gone up, but it's not crazy dilution. And then cash and debt, they have 62 million in debt, 1.1 billion in cash, 789 million in bonds. So whoever said they have a lot of debt, at least right here on this chart, I don't see their debt. I think someone said they have a lot of debt. I don't see where all the debt is. It looks like they have relatively zero debt. And then cash flow, we're looking at operating cash flow of $100 million, free cash flow of $101 million. I don't really know if those numbers are amazing. I have to look at their actual financials to see if those numbers are good, but it's definitely trending towards the right direction. I mean, look, I got to see if there's any fundamental due diligence around it, but the numbers don't look disgusting. I wouldn't say the numbers look disgusting. The revenue growth is not exciting at 16%. Definitely not exciting. Like if you wanted to get a low growth SaaS name, I mean, that's at least above 20%. There's Palantir, which is way more exciting because there's way more potential for Palantir, right? And I think Palantir will get closer to 24, 25%. So I don't know what's the exciting part of paying for 16% growth on Path, but maybe there's something there. Now, the market cap tomorrow is going to be 7 billion. They've lost 3 billion in market cap. Right now, the market cap is 10 billion. So it is going to be down. How much is Emit charging? I'm not charging TJ anything. I'm doing this for the knowledge, and I learn a lot from working with TJ. So getting a lot of valuable information from it. Emit became a bag holder. Yeah, literally. We're down. How much are we down on this, TJ? He has a $13 average exactly. We're down fucking $300, TJ. We lost 300 already, so we might have to get a juicier average and buy the dip. Joe Rogan dressed up like Optimus. Yeah, I saw. He did a podcast with some dude and he dressed up like Optimus. That was interesting. I didn't watch the podcast yet, but I saw a picture on Arc. Arc sold Path yesterday. Did they? Hold on, let me see. Have these guys been scaling out? They still own 18 million shares. Arc yesterday. Arc. Where's the email? Dude, I still use hold on. I still use AOL for my Arc email, so I don't even know how to navigate AOL. I'm trying to find my old emails. I need to just subscribe to their newsletter with my Gmail. Okay, I'm gonna pull up the email in a second. But if they sold Arc or if they sold Path, maybe they felt something was going on. 7 billion market, 2 billion in cash. 7 billion market cap, 2 billion in cash. So 33% of the market cap tomorrow is going to be trading at cash. It's one of those ones to look at. I'm not dying to get into Path, but it's one of those ones to look at. I'll come back with whatever I find, and we'll see. We'll see what we got on Path. Will CRM recover in the next few days? Honestly, I don't know. I think if my gut would tell me yes, because down 17% is kind of stupid. Mark Benioff is an exceptional CEO. I mean, he's probably gonna be on Kramer tonight because he loves Kramer. And he's probably gonna be upset because he's a very vocal CEO. Like last time, he was like, like he was basically taunting how much they grew. He's one of those guys who's really proud of his company, so he's probably going to come on Kramer today and be like, what the hell is wrong with the market? How do you guys not get what's going on here? So Salesforce down 16%. By the way, Kramer did have some thoughts on Palantir yesterday. Let me pull that up real quick. I think you guys will be happy with what he had to say. This is what Kramer had to say on Palantir yesterday.
Hey, Uncle Kramer.
How are you,
I
man?
appreciate you breaking it down for everybody, listening to your opinions. It's like having an uncle in the business, my man.
Oh, thank you very much.
You're welcome. I was wondering, what's your opinion on Palantir, which has been hovering between like 21 and 23 most recently,
Well, it's
and
very tough.
NEM?
Well, I think here's the problem. I know that consumer packaged goods stuff, but it's very tough to understand what they really do for the government. So therefore, I am no longer going to say that that's a stock to own. I can't figure out what they do. And that, ladies and gentlemen, the conclusion.
Dude, it's literal comedy. Like, it's actual comedy. And you know why he's saying that? First of all, his sentence is, it's hard to figure out what they do for the government. So now I'm saying that's a stock that is you can't own. First of all, that just makes no sense. Like, it's not hard to figure out what they do for the government. Like, let's just like that's just dumb. But second of all, he's been asking Alex Karp to come on the show for at least like 3 months now, and obviously Palantir has been like big middle finger to you because Kramer called them not a real company a year ago, right? So when you call a company not a real company and then you're begging the CEO to come on the show, he's probably not going to want to do your show. Like, it's just, there's a lot of other people they probably want to talk to versus Kramer. So I think he's a bit upset that Karp's not coming on the show. And so now he's like, well, we don't know what they do in the government, so they're fake. It's just like, it's hilarious, dude. Like, it's actually hilarious. But I thought you guys would get a kick out of that. Yeah, I think with Benioff today, Kramer's probably going to try to get him to be a little, you know, try to nail him on some of these results. And I don't think he's going to have much. Lower in guidance is not enough to get Benioff to squirm, because this was overall a pretty good quarter. So I think Benioff's going to come out hot and be excited about the earnings today. Again, is CRM a buy, dude? I have no clue. I mean, like, down 17%. I got to go deeper in their numbers. They're lowering their guidance, so the street's pricing that in. I don't think it's going back to 270 anytime soon. But could this rebound from 224 to 240? Yeah, I could see that happening. But the question is, like, here's the thing. Here's the real bear case I have about CRM. And I don't even know if it's a real bear case, but this is what I'm thinking about off the top of my head. Are they actually an AI play? Are they actually an AI play? They had this conference, their Dreamforce conference, and I think I saw Benioff like basically explain how CRM is an AI play with I don't even know how he said it, but he said they call it Einstein. They call it like AI Einstein. That's their like name of their AI product. Like, you know, Palantir's AIP, they call it Einstein or something. Einstein Copilot. But it's like, is that actually an AI play? Like, is this just kind of like a pseudo branding of AI, you know? And I think that's a question to think about when it comes to if there's any on the bones here when we're looking at Salesforce. Let's watch this quick little video on Salesforce on AI just to see what they're doing when it comes to AI and if there's any potential there.
Announce the launch of Einstein Copilot, your new conversational AI assistant for CRM.
Okay, I'm gonna turn the audio off because the audio might not be the best, or it might get copyright strike for whatever music they have. But so it's a commercial AI Copilot. It's in beta. So you have CRM apps, Slack, Canvas, Tableau, Heroku, all that stuff. And it looks like, what's interesting to me is if this is just another chat bot, then like, I don't know if it's really a big AI play. But if this is more of a computational infrastructure powered via artificial intelligence, then maybe there's some value there. Yeah, look at this. It's kind of a chatbot, dude. It looks like a little bit of a chatbot. Einstein, help me draft an email for Lauren Bailey about car battery possible replacement. It connects to a LLM. Dear Lauren, dude, is this their AI? This is just ChatGPT. Again, I could be super naive here. This is just one video I clicked on to learn about AI with Salesforce, but this is ChatGPT. This is like a billion different LLMs that can do this. And they call this Einstein. At least in this video, it's primarily about a chatbot. That's what I'm looking at. CRM Einstein. So the only reason I'm bringing this up is like it maybe the street's not convinced, because here's the thing. Okay, here's the argument I just thought of. If they were super AI, this is their AI website right here. Yeah, even the first picture is about a chatbot with Einstein. That's what they're calling it. If they were super AI based, why are they lowering profit margins and revenue guidance? Right? Like, isn't that a question? Isn't that an interesting, like if AI is this multi-trillion-dollar opportunity Why are you lowering the guidance? Why are you not capitalizing on that? Maybe you don't have the best go-to-market. Maybe you don't actually have the tools that customers want when it comes to AI. Maybe you've already sold so much into the enterprise that customers that are using CRM aren't willing to use Einstein. They want to use ChatGPT for the enterprise. Maybe they want to use Palantir's AIP. Maybe you're not winning those clients back. Again, I'm just spitballing here. But I think the street is right to assume, hey, if AI is such a big opportunity in the enterprise, why are you guys lowering your revenue guidance? Shouldn't you guys be accelerating that guidance and the profit margins if you're becoming more productive and efficient via AI? The CEO is too woke. Mark Benioff is definitely political, but I don't think that's the reason why the stock is down. He's definitely political. I don't think that's the reason why the stock is down. I think it has more to do with the growth. Okta's crashing now? No way. Okta's crashing? Wow. Holy crap. This thing was up like 7%. Dude, I think Path and CRM are taking everything down. Wow. Okta's down 5%. I didn't even pull up their numbers. Well, no, I read their headline numbers, but I didn't go to their website. Let me see if CNBC had any coverage on Okta. Wow, Okta's down now. Interesting. Okay, let's get a little bit more coverage on Salesforce, and then we'll go to Okta. Okay, here. Let's get a little bit more coverage on Salesforce, and then we'll go to Okta. Wow, everything's dropping now after hours on this. Real quick, let me check C3AI if that's still getting hit. C3AI, that one's still up 9%. Okay.
Growth, 7 to 8% growth for the quarter we're in. That's the first time in Salesforce's history that they will only grow single digits. Below expectations, a significant deceleration, and an indication that organic growth is going to be very hard to come by for this company, which would then lead to a conversation about what do they need to do in M&A, and that will cause further concern.
So what do they need to do with M&A then to jumpstart top-line sales growth? Or do they need to steer clear of that and just invest internally?
So they've already invested internally, and they will get some benefit from AI down the road. And we could talk a little bit about that more, because I think there's an insight beyond Salesforce today. But in terms of M&A, don't forget, their strategy used to be to go for the most exciting, highest growth companies, Slack, MuleSoft, Tableau, pay up for those companies and integrate them. Activists came in and asked them to stop doing that. So now they're looking at slower growth legacy companies like Informatica, a deal which won't happen, could be financially accretive, but isn't the exciting high growth type target. So they have to decide which way to go. And investors are going to really be focused on, can they make both accretive acquisitions, but also still buy category leaders that can contribute to picking up organic growth?
Gil, I thought this was supposed to be fixed, right? I mean, if it opens tomorrow at around these levels, we've lost not only all the gains for 2024, we're back to late November levels on this stock. So are we actually back there as far as the questions about Salesforce, given all the excitement around AI and given what Benioff had said about AI driving the future and revenue of this company?
Yeah, here's where we're at on AI. We have to start connecting the dots between Snowflake and Workday and Salesforce, companies that we expect, there's best-in-class companies that we expect longer term to benefit from AI. This year, AI is a headwind for all these companies because enterprise spend isn't picking up, but the portion going to AI is increasing.
Interesting. So he just said a couple of names that should be getting the bulk of the AI spend from enterprise, because their AI spend is going up, but the overall spend is not going up, is not going to those companies, aka Snowflake and Salesforce. That means, to bring it back to Palantir, Palantir really needs to crush Q2. Because if they get looped into this trend that they're not a quote unquote AI play and they're like a chatbot company, which obviously I don't think they are, but if they get looped into that mix, that's not going to be good for Palantir, because then the market might be thinking, okay, well, is Palantir actually capitalizing on the AI opportunity for the enterprise? And I think they are capitalizing on it, which is why I think Q2, they might be the winner this year, which is why they're up 25% year to date. The rest of these guys are down. But maybe that's the issue. The market's like, well, if AI is this opportunity, why are you lowering your revenue guidance? And it seems like Salesforce and Snowflake are doing just that.
Whether to AI projects that don't relate to these companies or buying up the capacity at Azure and AWS to be able to train and develop new AI tools. that spend is going away from these companies, and that's become a headwind this year. Whether that reverses next year, we'll see. We believe that it will, but right now, these companies are actually hurt by the shift to AI.
All right, we'll await that explanation from Benioff on Mad Money. Gil Luria, thank you. Well, the tables have turned with this one. C3AI jumping on its results, but it.
Interesting stuff, man. You know what? I think this is a market as Amit's offended he didn't say Palantir. No, I'm actually so happy, dude. Offended? I'm actually happy he didn't say Palantir, because in my head, again, I went to the AIP, not the AIP thing, the what did they do? The DC conference thingy last week for Palantir. I talked to the employees. They showed me how AIP works. And I was just stunned. I was like, this is real value. Dude, not one thing I saw in those demos was a chatbot. I saw actual value and actions being taken via AIP, contextualized via the ontology, and then deployed against supply chain, energy, logistics, a bunch of different modules. I think that's real value in the enterprise. And I think now the street's trying to figure out, hey, this chatbot shit there's no way we can give a massive premium to Snowflake's Arctic LM if all it produces is a chatbot. There's no way we can give Salesforce a premium for Einstein if all it does is chatbot commands. Again, I could be wrong there, but that's like my top level, what I'm seeing from just their website. If Palantir stands out in Q2, and they really are the winners in terms of connecting business value to the enterprise logic to AI, C3AI now is up 6%. Maybe that's where we got real value coming in when it comes to the SaaS players that win. And if that's the case, this eternal debate we've been having about Snowflake or Palantir, we're going to end up being the winners, guys. The Palantir cult is going to end up being the winners, dude. We're going to end up being the winners if the market thinks that Snowflake is just a data lakehouse and there's no AI play towards it, and their Arctic LLM is wasting money on GPUs to make another LLM that you don't need. By the way, PwC, the consulting firm, they signed the largest deal with ChatGPT for the enterprise today, and it's going to be deployed across 50,000 employees. So ChatGPT for the enterprise just got a major deal today, and Snowflake's AI LLM did not get that deal. Amazon didn't get that deal. Palantir didn't get that deal. This is a very competitive space. And so if the market thinks Snowflake is not really doing anything special here, and Palantir's ontology is what's really connecting the dots when it comes to AI, maybe Palantir ends up being the winner. Maybe. Oracle, Palantir, 100% yes. Oracle, Palantir would be the two winners there as well. We'll see, man. We'll see. Palantir right here, $20.69 after hours. It's definitely falling with the broader SaaS markets that are falling. Salesforce still falling, 17% down. UiPath now down 31% on the day. Amit, do you know when we're getting the Robinhood credit card? I don't. I do know that they let off 5,000 people off the list. And again, this is one thing you just got to be patient with. They're probably trying to figure out how to not get screwed giving a credit card to everybody. And that credit card, everyone starts charging 3% immediately, and then they have to pay back all these people. I think they're doing it in cohorts. They're trying to make sure they have the partnerships set up with all the businesses that they're doing interchange revenue splits with, and they're trying to roll it out correctly. So I think the new UI, the 1% deposit match, and the credit card are probably all going to launch, in my opinion, by the start or by the end of Q2, which is like July, August, when they report the results. I think when they report the results, that's when they're going to roll out all these features. But these are really hard features. They didn't promise it was going to be rolled out at the March event. They showed you. It's kind of like Apple. They show you the iPhone, then 5 months later, they release the iPhone. I think that's kind of how they're playing it out. And they're probably doing cohort analysis and making sure everything's good to go. But the fact that they're doing $1 billion in buybacks shows me that they're pretty confident on the math behind all the products, because there's no way you could afford to buy back $1 billion of your stock if you're not confident that the math works out. It seems like it makes sense. Hood learned their lesson. Yeah, 100%, dude. They're definitely taking things slow, even though they're ambitious, because they don't want to end up getting into a pickle with things getting up too early or releasing things too early. Sham, chat is a dead end. That's correct. I mean, when I talked to Sham on the podcast, he told us, I literally asked him, what is AI beyond chat? And the answer he gave was just so good about how it's the computational infrastructure of the enterprise that creates business value. And so like, what does that mean on a tangible level? When I was there at the demos at the DC conference, I'm looking at like, I think they were showing me like some auto manufacturer in this hypothetical demo that's like losing parts. And I'm seeing how they're connecting the real-time simulations of what to do if you're in that situation, if you work at like Toyota and you need to figure out how to get your parts, where to get your parts from, what different recommendations can you get to avoid certain weather patterns in Japan in order to get your parts. All of this stuff is AI powering those decisions, not like typing in, send me an email to Laura that I'm going to be busy at 4 p.m. Like, that's not AI, dude. That's not the real value here. And it seems like we're going to get some, it seems like it's time for Palantir to really put up results in Q2 to show that they're the real winners here. And honestly, if people, oh wow, Palantir's up 2. Oh wow, wow, you saw Palantir just go up real quick, then it went down. That could be Webull tweaking out a little bit, but Palantir down 1.4%. It could be that Palantir also is just like in a broader space to win. And if clients aren't picking Snowflake or Salesforce, maybe they end up picking Palantir, right? Maybe they just end up picking Palantir. So basically ChatGPT will dominate the market and other chat like AI will not be considered as AI. ChatGPT for the enterprise will be one of the big models that will win in the enterprise. But the reason I like AIP is because they don't care what model it is. They just care about connecting the model to your data. That's the real value. That's what AIP does. And it looks like Snowflake trying to create their own model. It makes no sense, dude. I'm like, why? What is the value of creating another GPT when GPT-5 is about to come out and it's going to be way better than whatever Snowflake creates or whatever, Gemini comes up with, because it's way better than Gemini right now? Or how is Snowflake going to compete with Gemini or Meta? Like, I just don't get it. I think Palantir's taking a better approach. I think they had this approach because for 20 years they built the ontology, and because they built the ontology, they understood how to really develop systems that connect your data, and then they just layer AI on top of it, and now they have a real product to sell versus just another LLM at the end of the day. Kathy bought UiPath yesterday. Yeah, I forgot that comment. So Kathy didn't sell UiPath. She bought 500,000 shares yesterday as well. So she is down 30% on those 500. Dude, she bought right before earnings. Wow. That's a lot of shares. 500,000 shares right before earnings. All right. Rafi says, Amit, I use Salesforce daily for many years. They have been advertising Einstein for like 4 years now, and it doesn't do jack shit. Well, there you go. This is why it's nice to have this chat, dude. I mean, just getting those anecdotal experiences, it's not an entire thesis for a stock, but it lets me know, okay, someone who uses Salesforce daily right here is not even considering using Einstein because there's no real value there. And if Einstein is their AI moat, I mean, if you're lowering your revenue guidance, maybe there is not a big AI moat for Salesforce. All right, that's it for me, guys. Thank you for being here. We'll be back tomorrow on the Market Open. I'll have a Palantir episode. We got a bunch of deals today. We got the Eaton deal on Palantir, and then we got a $12 million deal from the Department of Energy. So we'll be talking about all of that today on Daily Palantir. That'll come out in a couple hours, and we'll be back tomorrow for the Market Open at 8:45 a.m. and keep going from there. Thank you, everybody. I appreciate it. Now I own Path. Yes, TJ got me 1,000 shares, so I got to start doing some due diligence on Path, and we'll see if there's anything there, and we'll keep talking and figuring out if there's an opportunity. Or if there's not, we'll see. Thank you, guys. Love you all. I will see you 8:45 a.m. tomorrow with Daily Palantir episode in a couple hours. Bye, everyone. Have a good one. Good night.